If you want a better credit score to get the lowest interest rate on your mortgage, then I have the solution for you. We have 10 effective tips here today that Alex Lavender, who is a certified mortgage broker, is going to break down exactly how you can follow these in order to get the best credit score and lowest interest rate. So, Alex, let's start off with like what goes into your credit score and why is it so important with a mortgage?
Yeah, great question, Mark. Credit score, credibility. How credible are you to pay back this loan? Lenders want to see credit history so they know if you're high risk or low risk and what your likelihood is to be able to pay back the mortgage. So, credit score is very important, especially in the mortgage space, but in a lot of other avenues as well. The better your credit score, the better you can maintain that, the lower your borrowing costs are going to be, the more options you're going to have as well, and the better terms you're going to be able to get.
And what is the single biggest mistake you see when doing mortgage applications for people that is hurting their credit score?
There's a lot actually, but I'd say one of the biggest ones is if you are near the credit limit, like your balance is near the credit limit on a credit line, this has a huge impact on your credit score. Um, really, really will bring it down, but it is good because it's also a way that you can fix it relatively quickly as well. But one of the biggest issues that kind of comes to mind right now is if you close a credit line that you've had open for a very long period of time, you will see a substantial drop in your credit score typically. Because and what people don't realize is, let's say you had that credit card for 10, 15 years and you close it because you want to go to a different bank and get another one and start it from scratch. You just had 10, 15 years of credit history that you just closed, which means it's no longer um, contributing to your score. It's no longer active credit. So we see issues sometimes where people may have one or two credit cards and they close it. And what happens is they lose all of their established credit history and their score completely drops. And sometimes they can't get qualified for a mortgage because they don't have any current credit history. It can be very hard to get approved. The other thing that's kind of true with that as well is some of these loan places. I won't name any of them, but they're higher interest loan places, typically on street corners and stuff like that. They talk about these credit rebuilding loans, which actually are quite detrimental to people's score. Because what'll happen is they'll put this loan in place for about a year, 2 years time, whatever it is, and then at the end, a lot of the times they refinance them to another loan. And you constantly have these loans that are being opened and closed. So every time you get a bit of credit history built up, it's closed right again right away. That's big impact on credit score.
Wow, that's like, yeah, those are like, I think those are things that people don't realize because I know I've talked to people that think, oh, I have this old credit card. I'm just going to close it because I want to improve my credit score. So, what would you recommend doing then if someone has old credit and maybe they forgot about it and there was some interest due and they paid it off? You say don't close it down. So, what should they do then? And what if there's like a yearly charge on it? Like, what would you recommend?
Well, it all depends on how much credit you have. I mean, if you have 15 credit cards that you've had open for 15 years, then yeah, you're probably due to shut down a few. But what I would always say is see if you can change the credit product with the bank that you're with first before closing that credit line. So if you're with Red Bank and you need a visa that has travel points or something like that, and you have a basic one, why not see if you can do that internally and get a different credit product through them? Because a lot of the time you'll still keep the same credit account. It's just changing the type of credit card it is versus going to Blue Bank, which is going to be a whole different credit product. So that's a big thing. Um, what I would say is it really depends on a person's situation, but I would always say if you have a really long trade line, try and keep it open if you can, even if you're not going to use it much, maybe downgrade to a no fee card or something like that. Um, uh, but it's it's very specific based on situation. If someone has a credit card that they've had for 20 years and they have two other credit cards that are only open for a year, yeah, I would not recommend shutting down that credit card, because that will have a big impact on your score.
In previous videos, you've talked about the 222 rule. And if you haven't seen those videos, you should subscribe to Alex Lavender on YouTube. But Alex, can you explain what that rule is?
Yeah, so it's about credit history. And lenders typically want to see that you've had 2 credit lines open for 2 years of length with a limit of $2,000 or more on each with no missed payments. And usually if you can meet those minimum credit requirements, that will give you enough credit history to qualify for a mortgage if your score is sufficient as well. And credit products, they typically want revolving credit products. Revolving credit products are things you can draw and pay back. So things like credit cards or lines of credit, things like student loans or your phone bill, even car loans. Those are not as powerful in building credit or credit history because those are just monthly obligations you're expected to pay every month. Whereas revolving credit shows how well you can actively manage credit, how well you can take credit and pay it back.
Yeah, that's super valuable. What would be the fastest way that someone can actually improve their credit score? Like, let's say they want to get a mortgage, they just checked it for the first time. They're like, oh my God, it's way lower than I thought. Like, how could someone like that, realistically improve their credit score and quickly? And how quick is quick?
Yeah, we see this a lot of the time. Sometimes people will have very low credit scores that we can turn around really quickly. And one of the biggest things that'll affect credit score is that utilization. So if you are near the limit on these, so 35% of your score is based on credit utilization. So if you are near the limit or over limit on your credit cards or credit lines, it's going to have a serious impact on your credit score. Sometimes this could put your score in the 500s, like very, very low, especially when you're seeing those credit lines over limit. So the biggest impact on credit score is paying them down to 50% of their credit limit or less. Or what people don't know as well, it's kind of another trick, is increasing your credit limit is also another option if you can't pay it down. So for instance, if you have a $2,000 credit card that has a $2,000 balance, you could pay it down to 1,000, which means you'd have a 50% utilization, or you could increase the credit limit to 4,000. So now you have a $2,000 balance on a $4,000 limit. Both would have a similar effect on the credit score. If you can pay them down to 0, great. That's only going to increase the score further and further. But depending on where you are in the reporting cycle, typically what'll happen is that'll update on the credit bureau somewhere between 2 to 8 weeks from now, or from whenever you make the payment. So you can see that happen relatively quickly. I would say within a couple weeks to a couple months, just depending on when it gets reported on the credit bureau, because it is lagging. You essentially have to make that payment. The next statement has to come out, and then 5 business days after that statement's released is typically when it's going to be updated on the credit bureau.
And how does applying for credit impact someone's score? Because I know I've heard some people say that they don't want to do a mortgage application because they don't want to get a credit check. So how does it impact your score? And should someone be afraid of applying for a mortgage because it would be another credit check?
You have to be careful of the inquiries for sure. If you're checking the credit score yourself, it's a soft inquiry. So that's not going to have an impact on your credit score. It won't even show up on your credit bureau that you've accessed it. It's the hard inquiries that can impact credit score. And look, the credit bureau is meant to be accessed. So inquiries are supposed to happen. That's the whole point of it. It's supposed to be accessed. It's just when there's an excessive amount of inquiries, that's when it looks like you're desperately hunting for credit and you're getting declined, and that's a risk factor. I'd say, I believe the inquiries itself only makes up 5 to 10% of the score. And a lot of the times, if you have a couple inquiries a year, it's not going to have a big impact. I believe if you're having probably about 6 or more in a year, each one of those additional inquiries is probably going to bring it down a couple points, 2 or 3 points. But in the grand scheme of things, it's going to be minor unless you have tens or 20, 50 inquiries on there. The biggest impact for changing your credit score is going to be that utilization.
Okay. And if you are watching this and you have any questions on your own specific credit score and how to improve it, let us know down in the comments, and we'll be sure to create new videos around any questions that you have. And if you need help with your mortgage, or need ideas on how to improve your credit score for your mortgage application, I highly recommend that you go and use Alex. I'll include a link down below the video. Yeah, he's helped people not just get mortgages, but actually Alex, you told me before that you help people and say, hey, this is affecting your credit score. Go change this stuff. Come back to me in 3 months. So if you are struggling to get approved for a mortgage, I highly recommend using the link down below this video. And then let us know in the comments on what sort of questions or videos you want to see in the future. Alex, last question for you. Is there anything that I missed that someone should know about improving their credit score? Because we've gone over you've probably given us 17 amazing valuable points now. But is there anything else that I haven't asked you that you think people should know?
I think the biggest thing is what we discussed is if you don't know what your credit score is, go out and access it. And those soft inquiries do not hurt your credit score. So monitor it and see. Every person is going to be different based on the profile of what they currently have set up. Maybe there's some things on there that have hurt your score. I would say I would leave with this. If there have been issues on your credit score from the past, whatever it is, collections, missed payments, consumer proposal, bankruptcy, whatever it is, especially with collections and missed payments, those are going to fall off your credit bureau after 6 years, at least with Equifax. So that's going to kind of give you another chance. The same is true with a bankruptcy. It's going to fall off 6 years after discharge, and a consumer proposal is going to fall off 3 years after discharge. So life events happen. Sometimes the credit's impacted. If it is, it's a matter of time. Things will improve. So the best thing you can do is rebuild today, start creating that foundation, get that active credit, start paying on time. Because even if there are things that happened in the past, the lender can look and say, oh, yeah, 3-4 years ago, this life event happened, laid off job, disability, whatever it is. And look, they've been making their payments ever since. So the more clean credit history you can get after the event and the more time that you have, it'll eventually fall off. Is typically within 6 years, everyone has a fresh start with credit.
Wow. I mean, super valuable information here. And as always, subscribe to Alex Lavender on YouTube, and we'll see you in the next video.